Hello everyone, my name is Advait Italia and welcome to the Daily Market Updates, where I share my insights about market action and my analysis of different time frames, and then finally I share about my forecast about what's going to happen tomorrow or what is more probably or likely going to happen tomorrow. So without further ado, let's jump right into it. So as you can see on the weekly chart, there are 2 to 3 big observations that I want to share. The first one is over here. This is a range of, the golden pocket of the Fibonacci pattern that you can see. I have drawn the upper range and the lower range. I have marked the levels, and also we are observing that this range has not been broken since almost May or June, right? So we are just consolidating and chopping as far as weekly time frame is concerned. So one key thing to note over here is today we got perfectly rejected from the R1 level and the 5-day moving average, that is the blue line that you can see over here. And also that coincides with the red line, that is R1 level on the weekly time frame. So this is an important observation that the short-term sentiment, that is the 5-day moving average, is not yet conquered, or we have not closed above that level yet. So we perfectly got rejected from that range. So these are the upper range and the lower range of the fib pattern. Anytime we break either below or up would be, the indication of a major trend to continue. So this is my take on weekly time frame. Now let's jump on to the daily time frame. So as you can see over here, this is my daily time frame chart. So I have few things to discuss over here. So as you can see, yesterday we formed a perfect doji, signifying that there was an indecision in the markets. Now, when we started the day today, we really bounced from the strong support zone that I have drawn over here. So as you can see, like this strong support zone has been withheld multiple times, like in the month of August, in the month of September. We are as of now holding in the month of October as well. So on the daily time frame, until and unless we go below that zone, there is very low chance of us going lower. So we have to continuously see and watch this strong support zone that I have mentioned over here. And for the market to go bearish or to go down, we need to break this zone. But even after the earnings season this week, and even after the Fed speaker Jerome Powell, after the FOMC conference, he's going to decide how much he's going to raise or if he's going to keep the rate same. Even if we don't break even after those events, then there is a very high probability that we get a Christmas rally or we rally until January. So it's going to be a choppy rally, but for us to go higher, we have to strongly defend this zone. So that's one of the observation. So in the daily time frame, another important observation that I did was over here. If you can see the 150-day moving average, we got a perfect rejection from that. We also touched the 5-day moving average as well, but right now we are failing to close above it. So the sign of the shortest term sentiment, that is 5-day moving average, if we cannot close the session above that, then that is not a good sign. So for any bulls to be a little bit confident, they have to close above the 5-day moving average. But right now, it doesn't seem to be that case. Also, one other thing to note is we have not yet closed above the range. So this range of the Friday, like we have not closed above this high. So there is still a lot of selling pressure, and there is still a lot of uncertainty. So until and unless we close above this line, that is 14,888, it's very hard for me to be bullish on the daily time frame. And now let's jump to the intraday time frame. So in intraday, I normally look at 5 minutes for my entry and exit, and I look at 1 hour to get a broader perspective. So when you look, so when you go to the 5 minute time frame, and when you see today was a very good day for learning, and let me tell you why. Normally, I recommend people to not take any trades in the first 30 to 45 minutes of the trading session. And this is exactly the perfect day to signify that statement. If you see over here, we opened at 6:30 Pacific time and we just consolidated till 7:20. Almost 55 minutes we did absolutely nothing. We barcoded it. So this is pure barcoding. So if you see this range, this is like the market did almost nothing. So the first high of the range, that is the first 15 minutes, and the low of the range, we were just barcoding. So that is why I normally recommend people to not trade in the first 30 to 45 minutes of the session, because after that market tends to reveal its real direction. Today was also an important day to demonstrate the importance of pivot points. So if you can see over here, the broad red line is the R1, that is the resistance level of the pivot point over here, as you can see. So we have perfectly rejected from that level. So this is why technical analysis works. This is why the discussion about the levels is important, because we even if somebody took the trade at this resistance level, look at how much room did we have on the downside. So this is not an ordinary move. It's almost 166 point move. So even if you capture 25% of that move, even if you capture, let's say, 15-20 points, so these are futures products. So in these futures, even if you are able to grab 20-25 points, it's going to make you a good money. And depending on the position size, you can actually make real good money. So this was a perfect day wherein it was range bound. And also notice the level at which it got rejected. So if we see this level, it's 14,872. Go to the daily time frame and it exactly coincides with the 150-day moving average, right? And it also exactly coincides with the zone of previous day's high. So until and unless we don't break the previous day's high, and until and unless we don't sustain above the previous day's high, it is very hard to be bullish. Because for us to go higher, we have to break the ranges, and also we have to break the channel high. So this is the channel high, right? So this was the perfect day, perfect opportunity to learn that and validate why technical analysis works. So after that, I wanted to discuss also that today starts the beginning of the big tech earnings. So Microsoft and Google are, going to announce their earnings. So that definitely is going to create a lot of volatility after hours. So make sure that you close your positions and make sure you keep an eye on these ranges. Also, one important thing today, why we use VIX in our analysis, is we use VXN, that is the volatility specifically for Nasdaq contracts. So as you can see over here, the VIX made low on 7:45 Pacific time, and as you can see, it was on the support so S1, that is support zone S1, that is this big green line. And you can see the exact timing, so 7:45, and you go to the intraday timing, 7:45. So when VIX is when VIX is hovering around the support, then and it is holding the support, then you can see the inverse happening in the Nasdaq contracts. That is, it is going down since VIX is holding up. So the relation is when VIX goes up, the market goes down. And when the VIX goes down, that is, if the volatility goes down, the market should ideally go up. So this is how we actually, analyze, we just don't analyze Nasdaq futures. We also analyze the correlated assets so that we can have a more informed decision and more confirmations. The more confirmations that we have, the better our decisions will be. And as a trader, our job is to increase the probability of success. So when you do this intermarket analysis and when you do this multi-time frame analysis, it helps a lot. So today was a perfect day to demonstrate that. Today was a perfect day to actually see that in live action. So this is my take on intraday. We discussed the daily levels over here. We also discussed the weekly, observations that we have. And again, to sum it all, I would like to, let you know that it's very important for us to recognize that let the markets digest the earnings week and let the markets digest the Fed's decision. So the dust is going to settle, let's say, in a week from now. And that's when we will actually come to know the real trend of the markets. So until then, enjoy the analysis and thank you all for watching.